Well, one by one, the big banks have fallen in behind each other. After a chilly week going it alone in raising its mortgage rates, Westpac was joined by the Commonwealth Bank yesterday, NAB this morning and ANZ this afternoon. The cost of borrowing in the $1.2 trillion mortgage market is rising just as the cost of beefing up capital is passed on to customers and not shareholders. The hikes have backed the Reserve Bank into a corner. The November meeting could now yield a rate cut. David Taylor has the story.
The cost of keeping the banks unquestionably strong has come at a cost. Customers, the banks say, were warned. In fact, the top banker at the ANZ Bank recently issued this blunt statement, saying customers will pay more for home lending after announcing a record $7.3 billion profit. It all relates to the Financial System Inquiry, a blueprint for safer, fairer banking. The report's author and a former banker himself, David Murray, says the banks have overstepped the mark.
By moving 20 basis points, Westpac is inviting the obvious response from the regional and other banks to compete harder.
Research commissioned by the Financial Inquiry found that boosting the bank's coffers would only have a modest impact on home loan costs, around 0.1%. That's fallen on deaf ears. Westpac moved first, raising its standard variable rate by 20 basis points, or 0.2% to 5.68%. The Commonwealth Bank then raised its rates by 15 basis points. And then today, the NAB moved by lifting its standard variable rate by 17 basis points, and the ANZ squeezed in another 18 basis points. The banks say they're balancing the interests of all their stakeholders.
There is no question that the borrower, unfortunately, with the 18 basis point increase, is receiving an additional cost uplift. But you've got to remember that the rates are at also historic rate levels, lower levels here. And as a bank, what we've done as well is tried to position our rates as the lowest in the marketplace. So we're trying to trade these things off. It's never an easy decision, and it's a decision that we've not taken lightly, and that's why we've taken some time to make it.
Roger Montgomery says it's clear who the banks are really trying to get on side.
First job of a business is to reward shareholders. So the only way a customer might hedge themselves is to also own shares in the banks. The reality is that that's their first priority, to increase their profits.
No, I don't think it's fair because they're making big profits anyway.
I think it was just a matter of time, wasn't it?
How so?
Well, because once one bank does it, the others tend to follow suit.
Obviously, they're worried about what could be happening in the future, but I have a little mortgage, and obviously it's going to affect us and affect business.
She's right. A borrower on an average $300,000 30-year loan will now pay an extra $500 a year. But Steve Johnson says that's all part of modern-day banking.
Look, they are losing in the form of a higher cost of loans for sure. They should benefit as well long-term from a more stable financial system, that the financial system can wear downturns better.
Don't expect any sympathy from the Treasurer.
Having a strong banking system is good for the country. Having a strong small business sector is good for the country. Having a strong export sector is good for the country. And as businesses incur the costs in making that happen, they will make their own commercial decisions about what they charge their own customers. And any business has to be able to justify that.
And if there is no justification, the experts say, why not shop around?
There's also options like credit unions and building societies that offer very competitive pricing. So I think the point is, I think the banks are really banking on the fact, I guess, that you won't change your mortgage, that it's too difficult to do that.
The Reserve Bank's position is now decidedly awkward, boxed in at the start of a race to raise interest rates. Odds are now that the central bank will make its own bold move on Melbourne Cup Day and lower the official cash rate to a new record low.